A lot of metrics to look at here. Transaction volume, I mean, revenue, very low, leverage ratio, the lowest since 2012. Can you just talk about the moment we're in and how long it will last if, in fact, the rising rate environment continues?
Well, we're in a pretty exciting moment for the housing market. You know, it started with COVID, but remote work has really accelerated some serious changes in the housing market. It shows up in huge volume of home sales, which we benefit from, not just in 2020, but very strong momentum starting in the month of January, so for example. And for us, it led to a lot of delivery on operating EBITDA, $500 million of debt pay down, and a lot of strategic progress. So we like the momentum. We do have both public health and macro uncertainty, so we're watching it closely. But the low rates we've had have helped. And the fact that rates are still projected to stay lower compared to historical averages is obviously good. But we are all watching, Chairman Powell's testimony pretty closely.
Yeah. Could you talk about some of the geographic differences in the markets? Are you seeing a smoothing out of markets in general as people migrate from high-cost areas to lower-cost areas, or blue states to red states, however you want to look at it?
Well, the acceleration of people going to these attractive tax and weather geographies is huge. It's been massive in the last kind of 8 months. Places like Texas and Florida, where we have some pretty large positions, are incredibly benefiting from that trend, and it is absolutely accelerating. It was already happening, but it's happening even more right now. You're also seeing a lot of suburban benefits across the whole country. It started in the New York City area, but it's happening in every geography, effectively, of people leaving the urban core and more strength in the suburban market. And then the biggest headwind in the country had been New York City for pretty much all of 2020. But on our business, at least, January, New York City turned to positive volume compared to January of 2021. So we like that green shoot there. But the tax and weather acceleration is a huge positive trend, and we expect that to continue.
In the housing space is Opendoor, which went public via a SPAC led by Chamath Palihapitiya. Can you reflect on how you view these direct home buying platforms that are well capitalized and are growing their share in the housing market, and the risk they potentially pose to your traditional broker model?
Well, the interesting thing I find is that all of the models that are trying to do, quote, direct housing purchases are either hiring agents now or partnering with agents, right? And agents have shown in 2020 that for all the talk, they remain, frankly, quite central to the transaction. So we like that position. We also like our ability to go head-to-head with those folks. We've done a joint venture with Home Partners of America, a company that's bought 18,000 homes already, so probably more than anybody else is my guess, though I don't know that for a fact. And we operate in 11 markets, and we think between our distribution of agents and that kind of home buying experience, if that model becomes a much bigger piece of the market, we are as well, if not better positioned than anybody to capture it. The fact that there is a lot of capital out there going after our industry, we welcome, because it shows we've got a powerful position in an attractive industry. And we think we really demonstrated it with our EBITDA growth and our debt pay down in 2020. And so, we welcome the competition, and we want to innovate from our leadership position, including in the way Opendoor and others are approaching the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.